3 months ago, I committed to investing $50 each week into the Australian share market. No windfalls, no risky bets, just a consistent, manageable amount put to work. In this video, I'll reveal exactly what happened to my portfolio over those 13 weeks, including the specific ETFs I chose and how they performed. You'll see the real numbers, the ups and downs, and whether this simple strategy actually paid off. By the end, you'll know if investing small amounts regularly can make a meaningful difference. I settled on investing $50 each week because it fit neatly within my budget, thanks to the 55-25-20 system I used to manage my $60,000 salary. That 20%, my future me bucket, gets split between an emergency fund, extra HEX payments, and investing. When I ran the numbers, $200 a month was what I could consistently set aside, which works out to about $50 a week. I chose Perler as my investment platform because it's designed for Australians who want to invest in ETFs regularly without paying high brokerage fees. The setup was straightforward and took me just 15 minutes, making it easy to stick with my plan. Choosing to invest in ETFs rather than individual stocks comes down to diversification and risk management. When you buy a single stock, your entire investment depends on the performance of one company, which can be risky if that company faces challenges. In contrast, an ETF is like a basket containing shares from hundreds of different companies, spreading your risk across the market. This approach is especially helpful for beginners investing smaller amounts each week, as it reduces the need for extensive research and minimizes the impact of any single company's downturn. With ETFs, you get broad exposure and stability, making them an ideal starting point for building a long-term investment habit. Let me break down exactly what I bought. Each week, I allocated 70% of my investment, so $35, into VAS, the Vanguard Australian Shares Index ETF. VAS tracks the ASX 300, giving the exposure to the 300 largest companies in Australia, with a strong focus on the financial and materials sectors. The remaining 30%, or $15, went into VGS, the Vanguard MSCI Index International Shares ETF, which holds over 1,500 companies from around the world, including giants like Apple, Microsoft, and Samsung. This simple split means I'm diversified across both the Australian market and global equities, reducing risk and making my portfolio less dependent on the performance of any single company or sector. After 3 months of consistent investing, I contributed a total of $650, $50 each week without missing a beat. My portfolio's current value reflects the real ups and downs of the market, showing a return that's modest but meaningful for such a short period. There were moments when the market dipped, and my balance briefly went into the red, especially during week 7 when VAS dropped about 2%. Watching those numbers fall was uncomfortable, but I stuck to the plan and let the automatic investments continue. More than the percentage return, the biggest takeaway is building the habit and staying disciplined, even when the market tests your resolve. Starting early with consistent investments is one of the most powerful advantages you can give yourself. When you invest regularly over a long period, your money benefits from compound interest, meaning your returns start earning returns of their own. Even small amounts like $50 a week can grow dramatically over decades simply because of the time they have to compound. The key takeaway is that time in the market matters far more than trying to perfectly time your investments. By beginning early and sticking to a disciplined plan, you set yourself up for significant growth that would be nearly impossible to achieve by starting later, even with larger contributions. Setting up this investment strategy on Perler is straightforward and can be completed in under 20 minutes. First, head to perler.com and create a free account using your tax file number and bank details. Next, complete the identity verification process, which usually takes just a few minutes with your driver's license. Once your account is active, navigate to the Auto Invest section. Select your preferred ETFs, like VAS at 70% and VGS at 30%, and set the frequency to weekly. Finally, link your bank account and transfer your first $50. From there, Perler will automatically invest for you each week, making it easy to stay consistent without manual effort. Reflecting on 3 months of investing, the most important takeaway wasn't the size of the returns, but the discipline of sticking to the plan. even when the market fluctuated. Consistency proved to be more valuable than chasing short-term gains, reinforcing the power of building good habits early. Looking ahead, I'll be exploring a topic that's often overlooked by young Australians: voluntary superannuation contributions and the tax advantages they can offer. This next step could make a significant difference to your long-term financial future, especially if you start early. Stay tuned as we break down how these strategies work and why they matter.